Good morning, ladies and gentlemen. Clueless A Trading Frank. This is the pre-market AM report for June 22nd, 2016. We are inches away from the Brexit referendum poll that's coming out on Friday morning. It should be available to us, I believe, from what I read, by Thursday, 8 p.m. So the effects of that will be seen in the overnight markets, futures markets, and then of course on Friday trading on on the 24th. Okay, so the bottom line is let's keep things real simple here. The Brexit vote is an unknown, regardless of the bookies in London, who are some of the best in the world. They bet on anything that moves. And regardless of the polls that are coming out on a regular basis, on an intraday basis, the reality is that it's still a uncertain moment. Now, these type of moments, you've got to use some pretty advanced game theory. And if you look at the simplest definition of game theory, you are looking at, it basically is a set of the multiple set of variables input in a model, which can have multiple outcomes, right? So in in simple English, you got to evaluate what the probabilities are of a particular certain outcome to happen. Game theory used extensively in the stock markets, in the financial markets. It's used in our lives in daily decision making that we do. We look at what the input is on something, and then we look to see what the outcomes might be, and we decide to go one way or the other. So saying all that, my job here is not to place my members, or I wouldn't highly recommend that you go in deep on one side or another, but to keep positions very light, because those light positions, if you get it right, whether on the long side or the short side, and I'm betting on the long side here based on the charts that I'm seeing, but I will also have a hedge against that. The fact is, small gets big, and we've seen that repeatedly in our daily trading, where we're getting 2, 3, 400% type of returns on many multiple trades. People who are holding this week's price lines, and I still have I would say moderate amount left, are waking up to the stock up $30. Okay, to 1373. I did say it was going to go there. Look at my charts. So again, this business, is not about always taking credit for things that happen, but credit has to be given where it's due. Tesla, another story. Hit like a block, small amount of calls that are in there, just went poof. But as a professional trader, I'm in there after hours, picking the stock up at 194, selling it around 197, buying it back below 190, and now the stock is around 194 and change. Looking at the charts, which I'll show you, it's basically a Fibonacci mathematical chart. I expect the stock to basically go back towards 197, 198, and possibly get to the 38.2 Fibonacci level, which is at 202. Okay. Now, everyone wants to be an analyst on Tesla. Well, I certainly don't. The way I look at it is they know, these are heavy duty moves, buying City and all that stuff. So I'm not going to sit here and make a fundamental case one way or the other. Let's take a look at what's really at hand here, which is what the markets are doing on the E-minis, which are up, I believe, about $1.25, which is good. We don't want a big gap open. We don't want a gap down, right? We just want the market to basically sit around, SOA, as you know, sit on what and do nothing for today. That would be the best outcome if you ask me. So I'm going to start off with the internals. So here's a daily chart of the market, way it's happening underneath the surface. Not what you and me are thinking, not what the pundits are saying out there, but the reality of what's happening. And I'm showing it to you right now. So here we have the McClellan oscillator that I've guided people through from the bottom on the market, where we had the hammer reversal back on the 16th. All right, called it right at 2038 on the E-minis, and right now the E-minis are at 2081. So the bottom was called here at Clueless Day Trading at 2038. People who are not actively focusing on what they're doing, go back and take a look at it. Scroll down on the charts, listen to the video cast on that on and around that particular day. So saying all that, if you look at if we're looking at the McClellan oscillator and purely being technical, you can see here that it's gone positive. You can see that small sliver of a yellow bar right there. Okay, right there. Now, if it follows the previous trajectory, then we're in for a very sharp run, very fast. So I'll go over the levels when I go over on the external charts. So this simple, keep it simple. So that's what's going on. Now, what's happening with the stochastics? The McClellan oscillators carry a lot of weight. Believe me when I tell you. It gets bound towards this minus 200 level. It got to minus 176. It's some pretty serious stuff. That's pretty serious oversold conditions real fast. So again, I've always said every action has an equal and opposite reaction. Is it possible that it goes up? The McClellan oscillator gets overbought again at plus 200? Absolutely. And honestly, with the machines that are in play, which basically trade the markets, the Algo HFT, black boxes, the robots, this can happen in 10 minutes. You've seen it. I don't need to make these up. So looking at the stochastics, which is the derivative of the relative strength index, is you're looking at it, that's also in a positive form. Okay, it's also in a positive form. Now, it doesn't mean that we can't do a, and I'll show this to you, we can't do a double dip where it goes like this, dips around, and then takes off. One way or the other, it is going to get overbought. So if we get the initial move down, and we'll do that, okay, like that, and if it comes down either to 0 or bounces off the 20 level, I have a high probability bet here, okay, that it's going to basically go here. And that'll all come because news flow will be driving the markets like crazy going into tomorrow. There'll be this poll coming out saying the Brexit camp is leading and all that kinds of stuff. Somebody's going to make a comment, some big shot. Markets are fluid. So be ready for it. These are the most fluid markets, fast-moving markets that you'll ever trade in, or just don't trade. Or if you do little. That's just the best, suggestion that I can give you. Catch a good wave like a price line, take some fat profits off the table. Okay, those 1370 and the 1330 calls that I recommended and 1340 last week, you don't even want to know where it went. Look it up yourself. They're up more than 400%. And the 1370 and the 1375s, which were at around $4 yesterday, you see where they open? Probably 200% higher. The real stuff's been put out there, okay? Now, a pointed reminder here as I'm going through these charts here. My service is not designed for ditto trading, okay? I put out some very powerful markers, and then you take the ball and run with it. I put out the charts with some very powerful levels, up and down, and you take the ball and you run with it. You cannot mimic my book. I've said it before from day one. I will say it again. You cannot mimic my book. Somebody asked me a general question. I'll give a straightforward answer. Yes, I'm in it, not in it. Now, how much I'm in it or how much, if I'm overloaded or not, you're not going to be privy to that information. We are not ditto trading service. You're not mimicking somebody else. You keep on mimicking somebody else, just like in life, you'll never get anywhere. You got to mimic yourself. Your biggest challenge, performance, is you, not me. So I just want to be very clear about that. Okay? I'm a pro trader. I'm looking after my P&L and how to manage it at the most appropriate thing. You think you can mimic that? Well, you're in a fool's world. I do dumb things too. You want to mimic the dumb things I do? Great. Then you're a really big fool's world. So, I just want to make this very clear. I'm putting out all the stuff out there. At any given time, I could be out of a position. You got to manage your own trades. End of story. Okay. Now, and especially in these volatile markets, you can bring your whole account down to cash and sit there. Many of you do that very effectively, and good for you. So bottom line is, one scenario is that we get overbought right away before the Brexit, or we pull back and then we do a loaded coil spring and we get up there. So how does that all translate on the externals, which are the prices? Well, let me show it to you. Volume, I watch it real carefully. We had accelerating volume on the sell-off for 4 days. Fifth day it eased back, had a rally. Now it's easing back. As you can see, volume's shrinking quite a bit from prior to the Brexit thing. All right? And you'll see it spike on Thursday, tomorrow, and Friday. Okay. Now, let's see what's happening here on the dailies. So on the dailies, I've shown this many, many times, and there are far more precision charts that I posted out there. So it's, you guys just have to open your eyes and study it. This is the Think or Swim version, so I'm just doing it in real time. Right there. So the line in the sand, if you want to look at it in a very simplistic way, is the retest of the downtrend line that's around 2052, comes to about 2060 or so on the S&P 500. All right, that's it. Now, pattern-wise, it's bullish. Internals are bullish, or at least constructive. And pattern-wise, we are seeing a rising wedge, a consolidation, falling wedge, and now we are rising. If I amplify this part, or zoom in, I'm sorry, you can see here that you have this 34 and the 50-day moving average right there, somewhere around 2080 or so on the S&P 500, acting as strong support. The other thing is, notice this yellow line here. Remember, there's a lot of ways. Somebody doesn't even have to know anything about technical analysis. They need to have a very keen eye for patterns and lines and stuff. You can start to see here that this yellow highlighted line is the 5-day moving average, and it's starting to curl up and is acting as support as the market is finding its footing slightly and creating a base to jump off. So this is the base on the E-minis that you need to track, that the market wants to jump, is holding the 2074, 64 level. Call it 2075. Okay? So where's the jump go? The jump goes to this white line here, which is highlighted right now, which is roughly around 2090. 2090 is 2096 on the S&P 500. That's the mid Bollingers. The upper Bollingers are at 2032. I'm not even looking at that, but the market can go there. Believe me when I tell you. If it's a resounding, Remain vote, market can go there, and it'll go there fast. What I'm focusing on is that overall these are still holding, they're flattening, and like I said before, unless you see the 34 and the 50 starting to curl down, you stay on a long bias overall. Doesn't mean every stock's going to be up. It simply means you stay on a long bias and you set up your trades accordingly with that background bias present. Now, that's the daily chart. Here's your weekly. Here's your hourly. This is what I'm focusing on. The market is in a very tight, choppy trading range. So don't jump on every tick up or down. Looking at this here, the most simplistic way that I've shown before, and I'm showing it again, is this, ladies and gentlemen, is the situation going on right now. Multiple patterns, multiple shoulders and all that stuff. And I believe that it will resolve up here at that 2110, which roughly around 2116 on the S&P 500. This pattern, ladies and gentlemen, in my opinion, gets done. At this point, if the market does want to stay bullish, it will create a consolidation channel, i.e. profit taking. So don't freak out over that when the S&P drops 100 points. And then if it wants to remain on the bullish side, it will make it run up towards the 2130 level, or the all-time highs on the S&P 500 from May of 2015. It's really as simple as that. Now, what's the downside? We always have to know. So on the downside, what will happen, and these are all structural markets, you're going to hit 2070 with a thumb. This is strong support at this point. You can see the Darvis right here The market's trading within the Darvas box between 2092 and 2073 on the E-minis. You break that, there's a gap fill here. It's going to slice through the gap and it's going to hit 2050 like a thud. 2040 is the line in the sand that comes to about 20, let's call it 2040 S&P 500. Below 2040, we look at a different scenario. The drop from 2080 to 2040 is a good solid 250 points. Okay? So that's a 250 point Dow move. And on the upside, you got roughly 30 points or so on a powerful move I'm talking about, or let's say equal, plus 250. So we either go up, give or take, plus 250 or minus 250. And then after that, we see what happens. Remember, the world doesn't fall apart if a Brexit happens. A lot of it is factored into the market. Look at the sentiment in the market. It is pure fear. Nobody's moving. Okay? Biotech index, which I'll cover in a second, got clobbered, all kinds of stuff. Now, let me put this in the context of the S&P 500. Oil, by the way, it's on its merry way back to was 52, as I shown on my channels. This is your chart of the SPX. Let's look at the daily. So the SPX daily, it's taking its sweet time, is you can see that. It's pretty clear. Same story here. Nice. It's okay. Those are cooperating. And here at this point, as you can see, and very simple, see that this is the uptrend line which was broken, right? It was broken on the 14th or so, 13th or 14th. So now he's trying to enter that uptrend over the uptrend line. And if I put my predictive goggles on from a pattern symmetry standpoint, there is nothing wrong with this chart. Okay, consolidation, big move. If you want to look at it this way, this is what the market's doing. You can call this, from the bullish standpoint, a dragon bullish formation. So you got 2120 right there, upper Darvas, and 2130 upper Bollinger, very much on the targets. Downside, you got capped here at 20. You could just fall real hard towards 2018, 2020, but 2040 is the line in the sand. That also happens to be this large channel that the market broke out of. So if you fall into this channel, then you're going to move dramatically lower. If things really unravel and there's a big panic situation, you will hit 1980. Let me show this to you again. You will hit 1980 on the S&P 500. They're not going to make this in a straight line, but believe me, that will happen if things unravel hard. You're going to hit this with a thumb. You find some support here. Let's say it enters this channel. Quick move down here, 2040. Let's say it tries to bounce from here, fails. If we enter this big channel here, I don't have that much time left, then obviously at some point or another, you're going to do this. You're going to do this. So I'm keeping this real simple. I got only 1.5 minutes. One of the key reasons behind the scenes that a lot of stocks got clobbered for literally no reason. Biotech, for example, because one of the larger hedge funds, Visium, and I posted that, VISIUM, Google it, blew up, shut down. One of their lead fund managers committed suicide 2 days after he was arraigned in court. The big honcho, who's a real crook, is out on bail or whatever he is. Visium shut down. It does have repercussions in the market. They have to liquidate their positions to return the money to shareholders. What do you think is going to happen on the front side? So think, okay? There are certain reasons what's going on. And specific stocks get clobbered more than others. All right? So, in the meantime, good luck to everyone. We're all in this together. God bless. And remember, the USA is still the best house in a bad neighborhood, and I mean that. And if Brexit happens or whatever happens, a lot of money is going to come into the United States of America. You know it. I know it. Read the articles that I posted. Thank you for listening.